Welcome everyone to the latest edition of the JMI Wealth video update. Now we're recording this in early July, that's right, half the year has flown past us, the days are now getting longer and it won't be long before spring is in the air. And like me, if you're keen on your sport, what a feast we have in store for us this July. My favourite sporting event of the year, the Tour de France, is underway and there are simply not enough hours in the day to follow it. And a wee confession, this time next month, I'll be riding on some of the very same roads the Tour is following this year, albeit at a far more leisurely pace. Can't wait. The All Black season kicks off for all you footy fans, new coach and all, and of course, there's the 2024 Olympics. I mean, how good is all this? It's going to be hard to go to work. Now, continuing on that sporting theme, what's the scoreboard looking like for investment portfolios at the halftime point of this year? Well, look, the underlying theme so far this year has been one of strong global share market returns. Let's just look at some different markets. In the US, market performance very much depends which index you want to look at because there's been some material differences. Now, the best performing area has been the tech sector. Now, we look at the NASDAQ index. It's up over 24% in New Zealand dollar terms. The S&P 500, arguably the benchmark index for the US market, still looking pretty good with a 20% gain, and the less representative Dow Jones index, it's only got 30 stocks in there, still very strong with a 9% gain, but quite a way behind those other markets. Now let's look across the Tasman. The ASX 200 is lifted just under 6% in New Zealand dollar terms, and the global index, what we call the MSCI All Country World Index, it's up just under 16%. And then heading across to Europe, the good news continues. The European Top 50 Index has delivered a 13.5% return so far this year. Now, the real standout for the wrong reasons is our domestic share market, which so far this year is basically flat. It's gone nowhere. Fixed interest returns, they've been positive, the local market, although if we look at the return for the shorter dated bonds, or the short dated bond index, that's up just under 2%. And that tells us that while interest rates have been relatively stable, they may be a touch higher than they were at the start of the year, but they are delivering an attractive running yield. Now, that New Zealand dollar, it provided a tailwind for overseas shares to the degree that your position in overseas shares was unhedged because it's fallen so far this year. Now, we generally aim for a roughly 50% hedge on our overseas funds. Domestic listed property, well, it's had a tough start to the year and is in negative territory. Now, this all means that if you've been in a diversified portfolio, you will have enjoyed reasonably strong returns so far this year. But it leads into a key issue I want to talk about, which is acknowledging that we're currently living through a pretty tough patch for the local economy. And I'll talk a little bit more about that in detail shortly. But investors, particularly in a well-diversified portfolio of financial assets, have had quite a different experience in terms of returns from what the tone of the state of the domestic economy might suggest. In other words, these are two different things. So while there may be quite a lot of commentary about the weakness in the New Zealand economy, the performance of your investment portfolio, that will be quite a different story. So let's talk about New Zealand. Look, we're in a bit of an economic slump. Retail sales volumes, they've now fallen over the past year. If you look at job ads, seek job listing ads are well down in 2023. What we call the New Zealand PMI, which is a measure of manufacturing, that recently printed at 47.2. Now a measure under 50 means that sector is contracting, and it's been contracting now for 15 consecutive months. We also in June saw the release of our growth or GDP outcome. That was for the first quarter. It was a little bit stronger than expected, but at 0.2% growth, it still means the economy is pretty sluggish. And the economy is only 0.3% larger than it was a year ago. And expectations for second quarter growth, therefore a continuation of low or no growth, possibly even negative growth. And these numbers haven't factored in the large population growth that we've seen in the last 18 months. And if you look at a lot of this data on a per capita basis, per person, the story is grim. Now, it's our investment view that the central bank will reduce the official cash rate a lot earlier than their recent forecast track suggests. Now, in the recent monetary policy statement, the official cash rate forward track provided by the Reserve Bank had the rate holding at 5.5% until the second half of next year. Now, given the weakness we're seeing in the economy, we think it's entirely possible that rate cuts occur before the end of this year. We continually monitor and review our portfolio asset allocation positions, and we're currently adding a position in global infrastructure into our model portfolios. Now, we've recently completed our annual review of our strategic asset allocations, and our research suggests that this change will improve diversification and it will improve risk-adjusted returns over time. In the meantime, though, we're also supportive of holding our New Zealand fixed interest positions due to that view that we have that the central bank will indeed cut rates a little sooner than they're currently forecasting. Now, keeping abreast of developments in financial markets and making these ongoing improvements and adjustments to your investment portfolio is one of the real benefits of having a well-resourced and experienced financial advisor in your corner. We'd love to help you, maybe your family trust, with ensuring your hard-earned investments are being managed prudently and professionally. So look, feel free to contact us if you want to talk about your investment experience. You can look us up on jmiwealth.co.nz or on Facebook or on LinkedIn. We'd love to hear from you.